Good morning. This is Tom Alexander. It is Sunday, May 18th. I am traveling. As you can probably tell, I am on my laptop. So this is the stock market weekend update for Monday, the 19th, May 19th. And we are in a bull market. We're in a bull trend. I expect to see new all-time highs in one or more of the indices before we have some sort of relatively significant retracement of greater than 3%. That's the net bottom line. Now, we're at a really interesting juncture from a number of different perspectives, and we're going to talk a little bit about market profile today. It's going to be an interesting lesson, so I hope you will stick through at least that part of it. There are times when market profile can give a wonderful perspective on where a market is in terms of auction market condition. And I think this is one of those times where it can be particularly helpful. So please stick through at least that part of it. By the way, if you would like to have the charts for all the charts that you're going to see here, you can go to, let's see, go to this page, go to weekly update, click on weekly update, and then you can click on the weekend report for today. This is free, by the way. You can click on the weekend report. There's a PDF you can download, or you can just scroll down and look at the charts. You can also access several years worth of weekend reports here. You can follow from week to week to see this incredible auction market process in real time, and how it does play forward and how it can be extremely helpful to your trading, or hopefully you will find it can be extremely helpful to your trading. Okay, so let's take a look at the charts here. And let's see, let's start here. Now I'll come back to this page. This is the profile page that I want to talk about, but I want to start with the indices first. And this is the SPX. Now we're only a little more than 3% from a new all-time high. That's nothing. Now that doesn't necessarily mean we get there even next week, but I would be surprised at this point if we don't get there. There is nothing from an auction market perspective that is potential quote unquote resistance between this level and here. We are up 23.25%, and I think 28 trading days. It's been a remarkable, incredible rally. Now, there are a couple of things here. We're not going to go up at the rate of change that we've been going up since this low. You can already see the rate of change, even last week, has begun to slow down some. Average true range is now basically crashing from this level, and it can go a lot lower. That's what you expect in a bull trend. Eventually, a bull trend will slow down, and you'll do this grind similar to what we had, what you see over here, something like this, where the range is really narrowed down, even though the market goes higher day after day after day. The range is narrowed. Intraday trade becomes very choppy and rotational. That is tradable information, okay? You need to adjust your especially you intraday traders. You day traders need to adjust your day trading strategies and tactics to the idea that we're going to be in a more rotational market from day to day. It will make the market more tradable intraday, equally tradable, frankly, from both sides, long or short. Okay, that's the SPX. Let's take a look at the NDX. Similar position as the SPX, as you would imagine, because SPX and NDX are driven by the Mag 7 stocks, which have been on fire. The NDX is up almost 30%. It's about 3.7% from a new all-time high. It's structurally almost identical with the SPX at this point in time. And then we start to get a little bit of variance. Let's go to the Dow. Now, the Dow is not quite taken out its March 25th, 26th. This is the high occurred actually on the 26th on the Dow. I think it occurred on the 25th in the SPX and NDX. But you can see we're right at that level. We're a bit further away from a new all-time high in the Dow than we are in the SPX and NDX. A little bit of a divergence. We're up only 16%, 16.5% off this low. So there's a little, the Dow is lagging a little bit. All right, let's look at the Russell. Here we go. Okay, the Russell is also, it closed above this March high. So that's significant. The next level is up here around this 200-day moving average. It is a long way from a new all-time high. Let's just see here. Long. Okay. 17%, 16, almost 17% from the new all-time high. And then let's take a look at the New York Composite, which is very close to a new all-time high. It's actually, now this is all stocks on the NYSE. It's less than 2% from a new all-time high. It's up almost, 18.5% from this low. And then if we look at the equal weight S&P, it is about 4.5% from a new all-time high. So that's where we are. The indices are in lockstep to the upside. They're in bull trends. Now, I don't, are we in a bull market or bear market? I don't know. Nobody knows. It's always hindsight. We are in a bull trend. That's what price action, all the every aspect of price action suggests we're in a bull trend. Okay, now let's take a look at the profile view. This is really interesting at this point. Now, market profile is a topic all into itself, but I'm not going to give a deep dive into market profile right now. But there are certain precepts about using market profile that are consistent with auction market price action. And market profile, the highest use of market profile is to view it through the lens of this auction market process. That's what it was really designed to do. It's a graphing format. There's nothing magical about it. It doesn't, a given level doesn't mean certain things have to happen. It gives a view of the market from a horizontal perspective and where trade activity occurred. It is a concept of value as determined by market activity and the amount of activity between buyers and sellers at a given level. So bottom line is now the profile units you see on my screen here, these are quarterly profiles, meaning each individual letter or slot is 1 week of trade. Well, we have come up to a high volume node from the past 2 quarters of trade. Now, this itself can be significant at times, but it always depends on context. And in this context, I think it's particularly important. And it gives me a little bit of pause regarding the immediacy of the SPX and NDX trading to a new all-time high, because we're coming into this volume node, and also we're coming into this volume node with an extraordinarily vertical market that is unusual. Typically, and this is where I encourage you to please go to the website and look at the charts that I have posted there. I'm not going to do the annotations on this that I have done on the charts that are in that report that you can see on the website, alexandertrading.com. Click on weekly reports, click on this date. It's free, but it's really important information. It's educational. It's something you can take with you through the time frames. But we're trading into this area. We're extremely vertical. We're too vertical, one could say. Now let's go to, and I show this in the report. Let's go back to 2020. All right, this is the 2020 crash. Okay, we crashed into this low, and then we began this grind higher. Actually, it wasn't a grind. Actually, it was quite a furious rally. But I want you to notice something. Let me see if I can. What's this? Okay, I've got a drawing tools here. So we had this explosion off this low here. Now we did have this minor blip But I want you to notice this is sort of similar to what we have now, except now we have not had this rotational. And again, this is quarterly, so each one of these letters is 1 week of trade. Look how the rally truncated into a more rotational market. This is what I think is way overdue to begin now. Now, that doesn't mean we're going to have some, even 5 or 6% retracement. We could, but it's more likely to be, if we're in this strong bull trend, the retracements are more likely to be in the neighborhood of 2 or 3%. And then you quickly retrace, but it's a heavily rotational market. And that's what occurred off this low in 2020. Now, this low was historically compressed. This was a historic mini crash, frankly. Everything got super compressed here, even more compressed than the market did in this recent bottom, though that was quite compressed itself. But we're in this explosive phase off of a compressed condition. However, even if everything is wonderful, we're in this incredible bull trend. The market is going up, has gone up too far, too fast. You're going to see this begin to occur sooner rather than later. Now, are we going to trade to new all-time highs, the SPX and NDX, before we even get a 2% retracement? We could. I don't know. But as a position trader, my swing trading, I trade different time frames, but as a swing trader, position trader, I'm not interested in chasing this thing up another 2 or 3% and then having the rug pulled out from under me for some sort of 2, 3, 4, 5% retracement. At this point, from a swing trade perspective, I think your risk is probably 50-50. It's 50% higher to get 3%, 50% lower. So that's a coin flip situation. I'm personally going to take a pass on that. So let's see if we can erase this. And we'll go back to this. So that's where we are. Where is this thing? Bear with me. There we go. So that's where we are. Let's take a look at the internals of this market. All right, VIX. VIX is continuing to drop. Now, narrowing ranges and dropping VIX or a low VIX go hand in hand. So this also helps confirm my assumption, my thesis, that even if we go higher, you're going to see more of a grind on a day-to-day basis, up, but the daily ranges will become more narrow. The intraday trade will become more rotational. And then we'll go over here to breadth. And as I've said, 7 million and 1 times, now 7 million and 2 times. This is not particularly helpful in identifying tops. It's very helpful in identifying lows. However, we can make note of the fact, you can see down here, breadth, the momentum has begun to slow down here. That's consistent. Again, something else that's consistent with the idea, yeah, we may go higher, but we're not going to go higher at the rate of change that we've been going. You can see breadth is beginning to wane in terms of internal momentum with an expansion in breadth. And this is rolling over. Now, this doesn't necessarily mean a top is imminent. This can go on for a long time. However, it is something just to make note of in the back of your head. It's certainly not that we're coming off of some sort of compressed low at this level. Okay, guys, I hope you have found value in this. If so, please like, please subscribe. It's very helpful. Again, please go to my website. There are a lot of free resources there. Click on Weekend Report. I will talk with you guys soon. Enjoy the rest of your weekend.